Hello everyone. Now the topic today I'm going to cover is market structure. I'll try to make it as simple as possible. So let's go with the topic. So there are two terms, the basic terms of price action, that is break of structure and market structure break. So break of structure is actually means trend continuation. It is same for the upward and downward trend. And market structure break actually tells us that a trend reversal or trend exhaustion is on the go. So you see a low, you see a high. When a previous high breaks up, it is a break of structure, which actually means trend continuation. The trend is up, bullish. Again, we created a high, then we created a low, and then the previous high gets broken out, and then we see a market break of structure. Again a high, low, again a high, and we see a break of structure. When the previous low was broken down, then that is a valid market structure break. You can see it on the candlestick. So we have a high, and that was broken. So now we see a confirmed break of structure. Then we created a higher high, higher low. Then again, the previous higher high was broken down by a strong closing of a candle, and now the trend is continuing. But for the market structure big, we see a low, and now the candle closure is below that low, which means that the market structure break is visible now onto us. The trend is reversing, and the upward trend is exhausted. Now, if you notice that these break of structures or market structure breaks are always confirmed by a candle closure. If a candle is not closed and it creates a wick, that is not a valid break of structure or even a market structure break. So all you need to do is take the opening or the close of that candle, ignoring the wick, and then see if the secondary candle closes above it or below it to see the trend continuation or the trend reversal pattern. Similarly, on a downtrend, you see the price moves down, creates a low, creates a lower high, then creates a lower low, lower high, lower low, lower high, lower low. And when the previous high gets broken down, it is a market structure break, it is trend shift, or you could call it change of character of the price. So after it breaks down, it is broken down. Now you need confirmation. How you will get confirmation? Firstly, you see that market structure break that is confirmed by a candle closure. Then after that high is created, when that high gets broken out and you see a valid break of structure over here, there you have where you will be having your eyes on the next lower high to take your entries. That is what actually smart money concept is. That is very easy to spot. You just need some backtesting and some uh, level of unbiased and objective opinion on the chart, and it is not as complicated as the most of the social media tells you with those fancy words. So here you see it created this was a break of structure, this was a break of structure, this was a break of structure, but this was no market structure break or change of character because the candle is not closed below it. So the market structure break, the change of character, the trend shift, or the break of structure is always confirmed by a candle closure. So we don't see any candle closures over here, so the trend is continuing, the trend is bullish. But now here in this case, when this previous red candle was broken down by another candle and it was closed below it, so we see a market structure break. So all we need to do is find a reversal, find the retest, and then take entry all the way downwards. Okay, same is the case with swing lows and swing highs, but that is more explainable in on the candles chart. I can go on the chart and I'll explain it to you. Firstly, okay, this is very important. You need to understand that every trend shift begins with a market structure break or a change of character, but not every market structure break or a change of character is a trend shift. And just read it again. Just pause it and read the statement that is on your screen. Every trend exhausted, it shifts with a market structure break or a change of character. But that does not mean that if trend is if you see a market structure break, it is actually a trend shift. So we have fake outs in the markets, and we have a lot of fake outs in the market. So why we do that? Why we analyze these market structure breaks or change of character? Because we know that if a trend shift is happening, it is not going to happen without this market structure break or a change of character in the price. So that way we can understand there are higher probabilities of trend shift after seeing this. Now to uh, further further make our analysis more confident, I would say then we use those patterns, those candlestick patterns, those chart patterns after this basic price level price action uh, theory. For example, this is one of the most commonly used patterns. You can see this pattern on TradingView as well. This is actually the head and shoulder pattern or the inverse head and shoulder pattern, which is always which have different names. We can call it under over or over under pattern. So this is the pattern which you are looking at when you see that kind of market structure break. Okay, so for a bullish market structure break, you see this candle that creates a high, which is actually the swing high, and when a similar candle on the same time frame closes above that previous high, we see a market structure break. That is where we know that the trend is actually continuing. Same for the bearish market structure break. We see a low candle, and when the price creates a high and then closes below that previous low candle, previous bearish candle, that is a market structure break. If you want to see those that head and shoulder pattern, you would see it like this on the chart. I'm referring to the right picture on your screen, where you can see this head and shoulder pattern, inverse head and shoulder pattern on a candlestick chart is drawn slightly differently. The low at 1 is drawn from a wick instead of the candle close. So I personally prefer to use wicks for the lows because that's where traders will place the stop loss before the trap. So why would trader put their stop loss below that low? Because they believe that the price should be moving up and should not take them out. But the market moves up after taking liquidity, so that when this left shoulder is made, the market comes back, takes out all the liquidity, and then goes above, then comes back and for a retest, and then it goes above again. So how would you know that this low was created? Then this low was created, actually this is actually a market structure break. Looks like this, but what all we see, this is a bullish engulfing candle, and after the liquidity has been taken out, we see a valid market structure break. Now all we need to know is we need to see that retest level where we can have our increase. So these patterns work if you know the basic price action theory. You cannot be seeing these patterns every time on a chart without analyzing what the market, what the price is actually making, what the price structure is. So you analyze and you put these patterns onto the chart after those basic uh, understanding of the structure of price. Same way, now we have the head and shoulder pattern or the over under pattern, which is signed for the bearish reversal. A level, a trap rate is above it, then a retest for continuation of the control. So here you can see a market structure break. So it is valid for understanding that where the retest should be. So it is a very common reversal pattern that the market shows over and over again. So let me go to the chart. For example, this is a chart of the BTC. Now what we see that the market created a high on March 2024, and then we saw a valid break of structure over here. This is the break of structure. The price, the candle closed above it, so it is a valid break of structure for bulls. Now, what we see is this was a low that was created, and then we see this market structure break. So this is a bearish market structure break. All we need to see is the retest level, and when the retest level happens, and it is where we get increase for the short. Now one more thing, if you notice on this candle that these were the highs made. I won't be diverting from the topic. Uh, yeah, I want to keep my videos very short so that you don't have that much of time consuming, and you can practice on the chart more. If you have any questions, you can always write down in the comments. But you see, there we didn't see any kind of market structure break. No candle closed above that previous high. So these, what are these? What we call these? These are equal highs. And when you see equal highs, what is that? It is actually a double top, which we always see. This is a double top, and this line, which I have previously marked for the market structure break, is actually a neckline. And when the neckline breaks, what happens? Price goes back. Need to see some reversal pattern where we can enter some shorts over here. So now many traders have different strategies. I would only see basic price retest and see any kind of confirmation over here, over this area, so that I can go on with my shorts. People would see these fair value gaps, people would see most of the things, but all I need to see a retest. Then here we can see a bearish engulfing candle, so that we can go with a short like this. This is a bearish engulfing candle. This is the bearish engulfing candle, but I cannot go on the shorts over here because I don't have any confirmation. Now the neckline is broken down and the market structure break has already occurred. So now if I on the retest I see any kind of similar candlestick pattern, that is your entry for the short. I think that is so basic, and this is actually today is 26th of Feb. I don't know when I'll be uploading this video. I'll be uploading in 1 or 2 days, and uh, you could see the price action of Bitcoin is not at all bullish unless and until it creates a deviation, and it closes above this previous neckline and takes some kind of support over there. There is no support for this, so you have a live market up there also. So where is actually the support? The support is over here. So leaving behind any kind of biasness over here, this is actually the support. If you want to take any kind of long increase or you want to buy, this is actually the price. It's 73,300 something to 72,000. This is the level where you should be seeing any kind of bullish pattern to get into for the next wave up, if the market structure remains bullish. So thank you so much. The next video I'll be showing how to draw levels and how to go about level to level trading, so that it is much easier, cutting away all the noise and just seeing the chart and making your entries and making your exits more in a more easy, in a more simple way, and and we don't complicate that, where we see most of the social media is complicating. What trading is, it's very simple if you just have unbiased opinion. Thank you so much.